Hi, welcome back to our the DG5 playlist, and this is a short video about how to monitor those lower time periods and look at the setup for the target area for entrance and when the trade's underway, the profit target area, and see if those areas that we identified are strong or weak. If you're a member of the Drummond community, you can find lots of videos in the introductory section. There's also videos in the DG Inner Circle, and then there are the educational playlist on this YouTube channel. So for those of you that are not using the DG indicators, then this is for you, and how to monitor using some of the normal moving averages and RSI indicator for these examples. One way to trade these calls would be to just enter the market in the direction of the anticipated move at the time that the call comes out, and then you're assured of getting in, and then you can set up your profit targets, your limit orders to exit the market, or to get more precise and probably to achieve a higher degree of accuracy. You can wait and monitor the market when the market opens in the morning and see if it moves into the target area and how the target area looks on the lower time periods, and then enter at that point, and then monitor the trade up into the target area. Another way, if your account allows, perhaps you could trade 2 or 3 contracts and set multiple limit orders to exit. And that way, if the market does run, then you'll keep one in the trade, or and at least guarantee a profit on the lower range of the profit area if you exit some of your orders there and keep the other order in place and let it run. Pretty much the fielder's choice how you want to trade these, how much time you have dedicated. If you're working a full-time job and you need to set it and forget it kind of approach, this is doable. This is what Ted did in his test that lasted an entire year. Was set it and forget it and come back and see how you did. So it is still profitable to do that. We can just increase our profitability and probably take less trades if the market does not move into our target area. So if you have any questions, let me know, and I'll go through a couple of examples. And again, the introductory members portal, the silver, the YouTube playlist for educational videos on this channel, and the DG Inner Circle all have lots of tips on how to monitor this. Okay, in this example, 10-year Treasury note, we're in a downtrend and we moved into congestion, and we're looking for that congestion finish up in this area, and we're going to take this, we're going to take an entry up here with a profit target down here. And let's see how that worked out on a 60-minute and a 10-minute chart. So our target area to enter was up in this range, a little higher, and coming into the open, we can see that the price is holding in this area with the candlesticks, and you can see it a little bit better over here on the 10-minute chart. And all I have on this chart are a triple moving average with its 3 and 8 and a 21, and the RSI at the bottom. And we can see the RSI moving up here. We can see it diverging in price here. So we're setting up in the target area for an entry, and it looks good at this point. And when do we know? Well, this crossover here. So that's the entry, and then it fell down into the close for the day. Pretty simple. This is the 10-year again moving down, so we're expecting to short that market up here and cover down here. This is the monthly envelope bottom. This is the monthly PL dot, and there's also the weekly PL dot up here. So we're expecting just a light bounce up into this area and move down, exit down here towards the monthly PL or the monthly envelope bottom. And what happened, you come in the morning and price is above our target area to sell this. So price never stopped. You see the RSI still moving strongly up, still moving strongly up. We never got, or we're above the moving averages there. We broke up above in this area here. So this was never an entry. So monitoring the lower time period, we saw that the resistance that was our target entry area, that resistance was weak, it was breaking, and stand aside. And in this last one, we see the daily PL dots pushing up. This is the weekly PL dot here. This is the daily PL dot here. Yesterday's price, or the day before's price, closed up above the weekly PL dot, up above the daily PL dot. So we're anticipating that to continue. And what happened? Well, what happened is this market gap down below our entry area, and that was again not a trade. Nimble trader, a DG trader, knows what's taking place, and we say if the market's not doing what we anticipate, then it's doing the opposite, and the opposite would have been to perhaps jump on a short position here. And I don't want to confuse matters by talking about that. That's for the DG traders, the DG community that understands this, understands the market dynamics in that way. But in this case, the forecast was to buy, and it came straight down through there and never looked back. So that would not have been a trade either. So, anticipating the direction of the market and then monitoring the lower time periods would have kept you out of a long trade that would have been eventually getting stopped out. So those are 3 quick examples. Again, I urge you to dig into the amount of stuff that we have, videos and support between the YouTube channel and on the Drum and Geometry website. If you have any questions, let me know, and thanks for watching.